Tariff wars, non-farm payrolls, range-bound markets. What's next for this week? Now, the markets are stuck in limbo, shifting between sideways up, sideways down, breakouts, fake-outs. And this is precisely why I like to use an evolving price action process that's still mechanical in nature rather than the discretionary make it up as you go along method. Now, price keeps shifting. I'm hedged, as I've mentioned earlier in the week, so there's no real need to rush into the markets. Trump's tariff news is mirroring 2018, and we'll also explore how non-farm payrolls could be the trigger that we've been waiting for this week to finally see markets move. Let's look at the charts. Stay tuned for a fun stock market fact right at the end. Now then, what we've seen, again, earlier in the week, I marked off the sideways range that we can see here, just in that shaded area. And, you know, since then, we've had price again evolve with these multiple ups and downs, these sideways market movements. We could interpret this downward sloping channel. We've certainly got this sideways channel right here. We've had previous 1-2 day sideways channels, and the reality is that all we're watching is the yo-yo price movements over the last few days, pretty much starting from last Friday, around the overall support that we can see in the daily chart at the top left there. So it's just frustrating, but this is one of the things that the textbooks don't tell you about. It's this evolution of price, you know, especially when you've got a sloping trend line. You know, you're going to see the boundary levels adjust and change and fluctuate. So it's always better to think about the scenarios and, you know, don't force a trade. So ultimately, scenario one is to continue sideways. You know, we may see price continue sideways and push higher into, you know, from the range lows. Just see if we can change colours there. From the range lows into the range highs, and again the boundary levels are about the same anyway, so it shouldn't really make too much difference, you know, when we go from the range low to the range highs. The next thing that we could see is the bear scenario. We could see price push lower, pull back, and continue down. Again, no surprise there if you've been following the updates all this week. It's the same scenarios. Price goes up, price goes down, price goes sideways. Outside of our 6 money making patterns, obviously these are the 4 scenarios around ranging. You range lows to range highs and back again, breakouts of range highs, breakouts of range lows. So, you know, we can see price pop back and forth. And obviously the other one, as I've just mentioned, is the bullish scenario. Again, classic breakout pullback scenarios for continuation movements. Now, what's interesting is this is based on the most recent price data, but my trades are actually based off the earlier price data that we saw at the beginning of the week. So I had originally, drawing widget's messing up there. So I originally had my bull trigger, my bear trigger. So I got bullish there. I got hedged over here. And what we can see is price is just meandering down very lazily. So the bearish hedge trigger is actually making me a few pennies. So I don't really need to jump into the markets to try and nail the direction. As long as we stay here or meander sideways, we should be fine. And again, the hedge is doing its job. I'm not making a great deal of money, but more importantly, I'm not losing money on that, what we now know as a failed bullish trade. We do have non-farm payrolls. I am recording this just prior to release. We've got about an hour as I'm recording this. Again, if the market goes crazy, we could see price bop higher. Looking at ADD at the bottom left there, we are at the bearish extreme, but what we are seeing is price jump from those bearish extremes to the bullish extremes and back again. So we could see price jump back, you know, and bubble back and forth without really doing anything in price action to break the consolidation. So we need a significant shift in forecasted to actual for NFP to really drive the market outside of these boundary levels. So again, no matter which way it goes, we should be able to make something. For new trades, big question mark, the fact that I'm hesitating should say, I would not push the boat out for a new trade this week. It's a very messy market. And again, the hedge trade's doing its job, making a few pennies, not a huge amount by comparison to previous weeks, but nonetheless, we've got trades on and just waiting for a solid direction to ultimately pick its way through the noise. So here's a fun stock market fact. Did you know that in 1987, a trader at Solomon Brothers coined the phrase dead cat bounce to describe a brief market rally during a larger downturn? Now, the idea here is that even a dead cat will bounce if dropped from high enough. Now, short-term rallies don't always mean that the trend has changed, but a bounce isn't the same as a recovery. If you're tired of looking at the charts all day and want a proven process to profit from these markets regardless of what's going on, whether it's going up, down, sideways, whether you get the trade right or wrong, you should be able to pull something from the markets with an income-styled system. And if you like the sound of that, click the link next to this video. We'll be taken to a free training where you learn one of my 6 money-making patterns, and I will see you over there.